Alright, so today I have something really interesting to show you all. This is a fairly simple trick that you should be able to use no matter what strategy you're trading. And I realized that I've never really talked about this before, despite it allowing me to avoid so many losses and get some way better risk to rewards. So this is to do with the fact that candles almost always create top and bottom wicks to the point where it looks almost purposeful. And that right there is because it is. Market makers basically manipulate price to gather more orders. They often just temporarily push price up or down for a little bit in order to trigger retail stops and just create false breakouts. And in the process they form these wicks, and this is especially on the higher time frame candles, which I'll show you in a moment. This is almost certain to happen. It's like a 95% chance that it will create a top and bottom wick, and we can take advantage of that very easily. So for example, right here I'm going to use a main example of the 4 hour. I'll quickly go into a FOREX pair where price action is a bit more clean. And you can see almost every candle has a top and a bottom wick. You might be able to see the odd one that doesn't have one. I see one down here, maybe one up here, but that's literally like, that's maybe 99% of the candles have a top and bottom wick, or at least the open of the candle created a wick in one direction before going the other. And I think you can already see how this can be really helpful. But on the daily too, the higher the time frame, the more you can take advantage of this, to be honest. Sorry, the charts are a little bit messy. There's a lot of back tests from examples I give in the Discord, but almost every candle has a top and a bottom wick. The open of the candle will almost always create that wick. So if I go back onto UK 100 right here, because I have a great example of how we can utilize this. This will be using my strategy, but I think you'll get the gist of why this could be utilized in your own strategies if you're not trading liquidity, supply and demand. But right here you can see we had this demand zone, we had our level of liquidity with a fake out, and just to show you that I really do utilize this, this is the setup that I sent to the VIP Discord whilst it was forming. And if you don't know, our entry model is to wait for the bullish close. So we entered our demand zone and then we closed bullish. 9 out of 10 times we would enter right here. There's usually no reason not to. This is a fine setup. Our entry model has been given. All our rules are being followed. However, this candle is at 1:30. If you don't know, every 4 hours, I was about to say the dumbest shit. Okay, every 4 hours, there's obviously a new 4 hour candle open. And in my time, that'll happen at 6, 10, 2, 6, etc. So I knew that this next candle was about to open a new 4 hour candle as well. So instead of entering on the bullish close like we usually would, I knew that there was a very high chance that this candle would come down, create a bottom wick, and then go in that direction if it was going to win. There was an almost 0% chance that this new 4 hour candle opened and just went straight up and just never created that bottom wick, because like we saw, every candle here has a bottom wick. I actually can't see any that don't have a bottom wick. Okay, I see one here. Even so, it's a very slim amount. So if we're going to go up, we're going to create that 4 hour bottom wick before we do so. So like I said in the Discord, just before the candle opened, new 4 hour candle, gonna wait for a bottom wick first for a moment. And you can see 3 minutes later I said this, and that's because it immediately came down and we avoided a loss because of this. This can actually help us avoid quite a lot of losses just due to things like this. You can see in this situation we actually barely created that higher wick right there and then came down, but we got a second life, we got a second opportunity to not enter this and just preserve our capital. So obviously in this example, it would have just lost and we've just saved ourselves a loss. But just so you know, our entry model, we enter on the bullish close with our stop loss just below the wick that entered the zone. And a lot of the time, this candle will come down here, flip, make its bottom wick, and then come back up and we can enter somewhere around here and get an even better entry, because we know that that candle has made its bottom wick. So from there, it can easily go in your direction if your bias is correct. Another way you can utilize this is for the daily time frame. So let's just say, for example, the new daily time frame candle opened right here. Okay, and as you can see, this candle did not make a top wick. Prices then come down quite a bit, and that daily time frame candle still has no wick. So prices coming down quite a lot, still with no top wick. I'm not going to be taking sells in that situation, because I know price will want to make that top wick. Instead, what we'll be looking for is any demand. So for example, this was not a high quality close here, this isn't something we would take, but let's just say it was. This is a great confluence for us to want to take the setup, because we know that daily time frame still has no top wick, and we know the price is 99% of the time going to create that top wick at some point, and we're already halfway through the day. So if we're going to do it, we're probably going to do it soon. So you might as well take your chances for a demand setup, and you can see we flow up before the end of the day, and yeah, we ended up closing bullish. And on the daily time frame, this candle looks like this. You can see it created that large bottom wick, flipped and came up, and that just looks like a normal candle. And let's say, for example, you're on the lower time frames. Let's say you're on the 5 minute. Right here on gold, we have an example. This is a new 1 hour open right here. And you can see price created the bottom wick and then came up. And you can take advantage of this because you know this new 1 hour candle that comes in with a lot of volume has now made its bottom wick. So it is now free to go up. In fact, it is likely to go up because it doesn't have a top wick yet. So when this candle comes into the zone, reacts well, you can take a flip entry instead of a bullish close. So you can use this to potentially enter earlier, and this can give you a better risk reward. Where at the highs here, this is a 1 to 4.9. If you entered on the close, this would be a 1 to 2.6. That's obviously quite a large difference. That's over 2%. So you can use it to enter earlier, you can use it to avoid taking losses, you can use it as confluence, you can get a better win rate by taking these types of trades, and overall just you can kill it. Once again, right here, supply zone, had our level of liquidity, had our breaker structure, this fits all of our rules. And right here, this candle opened at 11. This setup was literally today, by the way. Like, this happens a lot. So this candle happened at 11. So instead of having to wait for this whole candle to close and getting in down here, you could have got in on the flip of this candle because you know it's just made that top wick and now is ready to go down. And look, bro, look at the change in risk reward. This is 3 times the risk reward if you just entered on the flip of that candle instead of waiting for the close, because you've got confirmation that that top wick has been created. Obviously, taking flip entries is entering earlier than what might be your normal entry model, so it can be kind of risky sometimes, but it also can triple your risk reward and often act even as a confluence to take a trade. And shit, even down here, I didn't even clock this was a 30-minute open. A lot of these setups hit on the 30-minute, on the 1 hour, on the 4 hour open. So you can see right here, you might have entered on this bullish close, okay? So let's say you entered on a bullish close because this is a valid setup for us. Stop loss just on the wick, and then the next candle opened, it's a new 30-minute candle, and you can see it created that bottom wick first. It would have stopped you out, it would have filled those orders, and then it would have went in that direction. So if you had just waited for that new 30-minute volume to come in for it to create that bottom wick and then enter on the flip, you would have got the same entry, but you would have saved yourself a loss and you'd just be way more confident in yourself. There's even a setup going on right now that I can see. Let's just remove all these. Right now, this setup is happening live. This is a new 15-minute candle open. 15-minute is like in between. I wouldn't just completely take a flip a lot of the time because of it. It's more 30-minute and 1 hour for the 5-minute time frame. But it is valid that now this new 15-minute candle has made its bottom wick. You could enter here. You could have entered on this flip. I'm not trading the 5-minute one right now. This isn't within my hours. I don't really know how well this works within this in this time period. But I mean, you can see it created its bottom wick and has immediately got a lot of volume going in the bullish direction. Who knows whether this will win? Obviously, it's not going to have a fucking 100% win rate because of this. This is also a lower time frame for this is a 15-minute instead of a 30-minute or 1 hour. Still a great confluence. And with this small of a stop loss, you could easily get something like a 1 to 4.5, I think, would be the stop loss rules on gold. Even if you did enter on the close right here and you're just going for like a 1 to 2.5 or something, I'm so much more confident because the 15-minute has just opened, created its bottom wick, and rejected into the zone. And even though I don't know how timing really works on the 5-minute, I wouldn't be surprised at all if this setup wins. And that's another reason you shouldn't be scared during your trades. If a candle is coming down a lot, like this one, it's coming bearish, say you entered this trade, coming bearish quite a lot, it could just be creating a bottom wick. Boom, what did I just say? We've come down, rejected the zone again, we're just creating a bottom wick. Who knows if this candle will flip, but it's pretty much necessary for it to create that bottom wick before it goes up anyway. But yeah, you can use this on any time frame, any strategy. There's a way you can utilize this information. And even though this is like kind of advanced, this might be once you've already like mastered your strategy, it is very simple. And I think you can find a way to utilize it very well. I've avoided many losses. I've increased my risk rewards on many trades. And I think this is something very good for everybody to know. So that'll be the end of this video. Let me know if you want any more details. I've been taught about this in the private Discord. Everybody's already been on that shit. I'm adding way more value to the Discord come July. Extra simplified videos, extra backtest results, my entire risk management plan, and just obviously extra information like this will come a lot earlier and in a lot more detail. Yeah, obviously that's just an option. I do put out a lot of information on this YouTube channel for free, so that is also a completely fine option. But yeah, I'll see you in the next video. Subscribe. I don't know the last time I asked for subscribers, but do that, and peace.